Morning, everybody. Welcome to May. Fine. How have we got to May already? May's Specialist Mortgage Web Show, or mini web show, as today's is. Hope you're all well. Hope you're enjoying the sunshine. I'm stuck in our meeting room. And it's quite warm actually, so I need some aircon, I think. Okay, we will. Your first spot on is click. I had one of those mornings already. I've set the laptop up, and what did I do? I didn't plug it into the mains, and after 10 minutes, everything switched itself off, and then panic station ensued until I remembered that you need to plug a laptop into the actual mains itself. So have not had a good start. Hopefully they're working. Excellent. My name's Tony Sutton, Managing Director of Specialist Financial Services Limited. I am your host for today. A little bit about me. Started in the specialist finance industry all the way back in 1983. Spent 6 years with a specialist lender, and subsequently I was headhunted by a broker. Set up my first commercial and second charge brokerage all the way back on the 11th of May 1989, so 35 years on Saturday, at the age of 25. I grew this from a two-man operation to having 141 employees at its peak, but left in 2004 because my ex-business partner became a bit of a you-know-what. And I set up Specialist Financial Services Limited from my kids' playroom in my house. So I moved from one extreme to the other. But then things just exploded for me, and traded very, very successfully for 4 years until the crash took away all our lenders and also all of our, probably 90% of the brokers that were putting business through us as well. But I stayed with it. Don't really know anything else. I've always really enjoyed it. So I thought, no, I'll stick with this. People always borrow money and this will come back. And it did, and it has. And now 40 plus years experience in the specialist finance market. So how much longer I can continue doing it, I don't know. I've probably got a good few years in me yet. My claim to fame, I'm going back to this one because I do tend to run out of these because we do so many of these shows now, a claim to fame or a claim to shame. So I've gone back to George, my nephew, who signed a multi-fight deal with Eddie Hearn back in 2022. He's still unbeaten. Recently won his sixth professional fight in Las Vegas on the Conor Benn undercard. In his amateur career, he was 4 times national champion and international gold medalist twice. And as it says there, a name to watch. He's got 2 fights coming up, one of which is in Brentwood on the 29th of June, the day after my birthday. So we're probably going to go and go and watch him in that, but he is incredibly good, very, very good. And if you like your boxing, he really is a name to watch. Our sponsor this month is Roma Finance, who love to lend, as it says there. A big thank you to them. Please remember, we are depending on outsourced technology and also my stupidity at times. So we do depend on our broadband. Our broadband does tend to go a bit dodgy if it rains for whatever reason. We've never worked out why, but it's not going to rain today. The speakers broadband, they could be anywhere in the country. And also Microsoft not trying to update my laptop, which is a fairly common occurrence at the moment. So I've switched them all off, but whether I've done it right or not, I don't know. Please bear with us. If it does go wrong, then we've got people here to fix it. If you have a question, go to the bottom right corner into the type your message box and put in whatever you want. We will try to get to all the questions we have in our time today. And say this is a mini one, so it's now shorter than our normal shows. There's no breaks in the middle, anything like that. This is our lineup for today. We've got Mark Foley, Mark Newman, and Cavina Harrison. If you don't recognise the lenders, you may recognise the logos. There you go. We start at 10:15 with Mark Foley and finish with Cavina, who will be from 11:15 to 11:45. And there's a bit from me at the end as well. Today's objectives, as always, just to increase your knowledge of the specialist finance market, hopefully convince you that if you don't already use us for to place business with, that you will start doing so. I know many of you do that are with us today, which is the reason why we put these on. It's a great source of business for us, but also from an education point of view, we do like to educate basically the broker industry as much as we possibly can. So I don't really think there's enough of it out there at the moment, a proper education. So we're looking at specialist buy-to-let, we're looking at bridging, we're looking at residential first charge, and we're also looking at semi-commercial. That's one speaker who's going to be covering semi-commercial and specialist buy-to-let in what they do. But the only thing we're not covering today is second charges. Presentations, each one lasts approximately 20 minutes with a 10-minute Q&A after each session, and the speakers have set themselves some questions. Sometimes those questions do tend to actually be covered in their presentation, So please, 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 just if you do think of something, there's no such thing as a stupid question. Please ask away as many questions as you wish. Don't give them an easy ride, is what I always say on these, because they're here to educate. That's what they're here for. And say there's no such thing as a stupid question. Feedback and CPD questionnaire will be sent to you automatically at the end of today's show. If you exit the show in the way I not tell you to, but ask you to, it will ask questions about how we can improve our events. It will ask you to grade the speakers, including myself, and what we need to improve. Just basically, we need your feedback as much as possible. We normally get about 35 to 40% feedback, but it'd be great if we could hit over 50% today. And your feedback is always very much appreciated. And if it's not good, we will make changes. It's as simple as that. And your CPD, this is very important. It will be emailed to you by 5:30 tomorrow. As you can imagine, it's sometimes quite difficult. We like to send out a CPD certificate which actually looks half decent, not something that looks like it's been written by a 5-year-old and you have to write your own name and company name in. It's actually done properly. So it does take a little bit of time, but if you've not got by 5:30 tomorrow, then check your spam folder and then contact us. And as I say, every show we do, don't contact us this afternoon to say you've not received your CPD, because we've not sent it yet. So give it till tomorrow, but I guarantee one or two of you will still chase today. But Gary, please, please, please leave it till tomorrow, then check your spam folder, because 99% of the time it is sitting in your spam. If you did want to find out how much, if you do work with us, how much you will earn, you can download our product commission and prop fees guide, which is available at the end of today's show as well. But it's also available from our website. It's very easy to find. But that's available to you. It's updated very, very often these days because of the amount of changes that are going on. GDPR, if any of you still haven't done anything on GDPR, which when we started these was about 75%, I still reckon it's about 40% of delegates have never done anything on GDPR. This just covers you just in case the worst ever happens and you've got the ICO and the FCA sort of like breathing down your neck because you've clicked on a dodgy email, for example. This would at least help you to show that you've done something should the worst ever happen. And it can happen very, very easily. There's a lot of emails flying around. I almost clicked on one the other day because it looked very, very genuine, but it wasn't. And luckily I didn't click on it. But it's easily done. So we complete these every year. There's the one there that's the annual assessment, completed every year. Got our May one coming up when I get back from holiday the week after next. So and it takes literally 5 minutes, but you at least got something written down that you can show should the ICO ever come in and say, what have you done regarding GDPR? Consumer duty, vulnerable customers. There's something that we continue to give out, and it's actually been very, very popular. Main reason that we do this is, as in anything that happens in our industry, we're told you've got to do this, like consumer duty, for example. You've got to be ready for consumer duty. But there's very little is actually said about how you go about doing it at times, other than reading sort of like 600 pages of FCA guidance, which makes absolutely no sense whatsoever. So and again, I've got to basically confess, I didn't sit here and write this out myself. I'm very much of the school that if someone else has done the hard work for you, then just copy and paste. That's what it's there for. So I just used what 4 lenders came up with, which was generated, I believe, by UK Finance to lenders, not brokers, which I could never quite understand. But it's free for you to use. So it tells you what you need to do to not only identify when someone is vulnerable, but then what you should do. Again, you can't hold us liable if anything does go wrong in the future, but it gives you some guidance at least. So just type in VC into the type your message part, and we'll get this out to this. Will go out to you today. Coming up 2 weeks' time, going a little bit about consumer duty now. We've got Robert Sinclair comes back for his 3rd session on consumer duty. And these have always been very, very well attended. And we do have a limit of 200 attendees. So if you haven't signed up to this, I urge you to do so because it's not to be missed. This tells you what to expect from the 31st of July from the point of view as someone who's not looking to basically get money out of you. I did a Simply Biz one recently, and I was absolutely horrified by what they were coming up with, which was quite simply was just advertising other products and services within the group, which I thought was wrong because it was scary the way they did it. I mean, I could actually see people from the questions that were being asked that it was there was genuine worry out there. And their only solutions were, well, download this, pay for that. And I think that's wrong. I really do. So Robert will be going through what you need to do or what you need to get ready. It's not as scary as you might think it is. It really isn't. But I urge you, if you're not signed up already, sign up to that one as soon as you possibly can. I am talking about Consumer Duty later. This slide normally says I'm not talking about it, but I'm going to talk about it later because I'm preparing for Robert's seminar in 2 weeks' time. But if you do want to watch an expert on catch up and not just me talking gibberish, then you can still watch the ones from 25th of May last year with Robert, and then post Consumer Duty, which he did, what was that, 5 months later, with how it went. And both of those have been incredibly popular. I believe they're on YouTube, or I'm not quite sure where we put them, but they're available from our website, and you can watch any of our former shows, all available at specialisthub.co.uk. Also available are our Sutton the Specialists that we completed last year, which was from Family Building Society, Tuscan, and Roger when he was at Tandem, because obviously now, if you do know, Roger is no longer at Tandem because they've announced a load of redundancies, but he will be cropping up again soon, and he is doing some shows with us later on this year once he resurfaces. And this year, this was actually our highest rated show that we've ever done. This was Scott Marshall, the CEO of Roma Finance, who obviously, as you know, are presenting today and also sponsoring today, who was talking about volatility creates opportunity. And that was a very, very interesting watch. If you've not seen that one, then you can go to our website and watch it on catch up. And you still get CPD for all these, which is, I believe, the next slide. It is. I'm running ahead of myself. You get CPD for every show you watch. We worked out a way of doing that. So have a look. If there's something you've not seen, have a watch, and you'll get the full CPD again. This month's prize draw giveaway, if I remember to do it, is the last presentation. So it's at the end of today, of the third presentation today, and has been kindly sponsored by the Dudley Building Society. So one lucky delegate will win 100 quid to spend as they wish on Amazon. But you have to, there's certain rules on this. First of all, you have to have been watching for a certain period of time. Today, you can't just go off and come back at, what time would it be? 11:30, for example. If you do decide just to leave your computer on and disappear somewhere and do a bit of gardening, for example, when I call out your name, you've got 15 to 20 seconds to respond. Otherwise, I'll call out another name. It's that sort of thing. It's really to encourage people to watch more than anything else. But that's there later on, if I remember to do it. If you hear a loud knock on the door, it's probably my son telling me, "Dad, you've forgotten to do the prize draw again." You've seen our old sod. So please, obviously, stick with us. And one last thing, I just watching the time. We're ahead of time. But one last thing, and this is becoming increasingly relevant. If you're one of the 11%, and I believe it's a lot more actually, but this is a poll that was carried out of FCA authorised brokers who were thinking of surrendering their permissions because you're absolutely sick to death of the amount of regulation you're having to carry out to do your job the way you've done it for the last 20, 30, sometimes 40 years, then give me a call. We've got an increasing number of people now who've just decided, you know what, I just can't deal with this anymore. I really can't. We have ways that you can still earn a very, very decent income stream and just take away all the headaches. We've got one guy who's actually, well, he's semi-retired now. He was retired when he first started, but he's now semi-retired, who just from his own client bank is generating more money than he was when he was actually working actively in the industry by allowing us to be involved. So give me a call on that number. You have to be quick. Today's my last day and I'm not back until the 20th. But give me a call and we can sort out something for you. Okay, first presentation's about to start. There's normally a sort of 10-second break, which allows my IT team to edit these. So they'll edit me out so they can edit in the speaker. So there'll be a quick changeover. So our first speaker is Mark Foley from Roma Finance. I've not met Mark before, so I'm about to for the first time. You should have received by email this morning Roma's product guide. That was emailed to you this morning, along with the other two product guides as well. A little bit about Mark. He has over 30 years experience in specialist finance and investment and is approaching a decade in bridging and development loans. He spent the first 20 years of his finance career with Lloyds Banking Group in sales and underwriting roles across multiple divisions before covering the whole of the UK as investment manager for Heineken UK. My speech is getting increasingly slower, so because he's still not appeared as a speaker yet, so we might be having some issues. He then joined the bridging world with Lend Invest before moving to Roma, where he is Senior Business Development Manager for the Midlands. Mark is dedicated to building strong relationships with partners and providing the best possible outcomes for borrowers. And if someone in my office can just let me know what's going on, and then I may speak even slower on the next bit, because it's not the longest claim to fame that we've ever seen. Somebody has just changed the slides, which isn't a good start. So I will go back to where I was. So that might be Mark, who's just trying to click buttons in panic, possibly. Let's see if he's disappeared out of the room again. No, he's in the presenters area, so he should be there. We're not getting his camera on mic at the moment. Okay, right. Told you, there's always problems. Always. His claim to fame: when Mark was 16 years old, he played in the same cricket team in the Birmingham League as Dean Headley, who then went on to play for England, who I don't remember, I must admit, but went on to play for England. Then, if those of you that are regular watchers know what my cricket's like anyway, from one of the stories that I tell from time to time, played for England at the highest level as an opening test match bowler. Let's just say that Mark was pleased to play in the same team as him rather than against him. Okay. And Mark's still not appeared in the room. Oh, there he is. Yay. Mark, can you hear us?
I can. Yes, I've heard everything you've said, Tony. I don't know why it wasn't allowing me to come in, but
absolutely no idea.
I've been here for the last 5 or 7 minutes. I think, yeah, came on about 10 past. So.
I reckon it's Bill Gates is sitting somewhere in the States. Is currently trying to block you because we don't use Teams. That's the reason why. So you've heard your intro. Very nice to meet you. I've done the intro, so now it's over to you. So I'll click. Okay. Did you just click a button?
I did.
You're going a bit mad on the.
Done for me?
Yeah, I'll click. I'll get you where you should be.
Okay, that's fine.
So you're there.
That's it.
Okay. If there's any problems, what I'll do, I'll monitor it.
Yes.
But it's over to you. I'll see you in about 20 minutes.
Okay, lovely. That's great. Good morning, everybody. Yes, as Tony has just said, I'm Mark Foley, Senior BDM for Roma Finance. And I'm just approaching 3 years with them. You've heard about my history with generally property related. So in terms of the presentation, what I'm going to do is just to run through where Roma sits in the market, our appetite, and where we sit strongly as a lender within that field. What we look from all of our borrowers. There's some handy hints and tips within there as well. And then I'll run through the product range that we've got. And then to finish off, there's a couple of case studies in there that we'll just run through quickly. And then the normal Q&A right at the end. So in terms of property, it's really just like any other business, but it's key to identify opportunities to maintain a good margin from these opportunities. So in terms of economic focus, obviously the market has been very volatile over the last few years. We've seen a lot of change really in terms of hybrid working, which means obviously the demand for office space has reduced. The long-term regeneration of the high street, and we still have to deal with sort of the green belt issues, which a policy dates back to 1935, believe it or not. So that needs a big overhaul if we're going to sort of increase our property, new build, and sort of reach demand really. And then following on from that, we've got this, we identified sort of 15-minute cities, which the basic requirement is to achieve economic, social and environmental benefits. So this means that really anything can be reached within 15 minutes of sort of travel. So in terms of margin on property opportunities, market conditions can be very volatile in terms of the GDV. And these can become very sensitive to general market changes. We've seen raw materials, price variations, availability. All these types of things will affect the overall deal and the profitability within that deal. So in terms of following on from that, it's currently what we feel is it's a buyer's market. I don't know about you, but I've seen a lot of sale boards go up where I live over the last month or two. Properties are still being sold. There's a lot of sold boards, but we tend to feel at the moment it's rather sort of a buyer's market. So investors out there have great opportunity. So in terms of tips, top tips, always try to look for investment from local council, government. This means, a large amount of money is generally being pumped into the area. The facilities, transport always tends to be better. So it's always a good spot if you can. On the back of that, use it to your advantage. In terms of contingency, I would always recommend at least 10%, ideally 15% is built into the deal. So I do see people running out of money because they sort of cut back on certain things. Just give yourself enough money. Even if you don't take it, it's there within the deal, and it's a good fallback to have. Exit on every type of deal is still vitally important. Give yourself options. If you're intending to sell, do your homework. Does that property, what you're intending to do, sit well within that market? And have fallback options. If you're intending to refinance, don't just pin your hopes on one sort of lender. Give yourself 2, 3, even potentially 4 options where they have the appetite to take your loan out. So the big key message there is, and it's one that always sticks with me, is when buyers buy when others sell and sell when others buy. So these are just some range of opportunities which I've seen over the last couple of years or so, where the market has changed. I've seen hotel conversions to apartments. I've seen hotels converted to large HMOs. In terms of HMOs, still very, very popular, and some are being extended. Room numbers increased. That's still going on. There's still some pubs kicking around, generally with car parks for opportunities for new builds. And we're still seeing a lot of commercial conversions to residential as well. The banks, I think sort of NatWest went through a phase where they sold a lot of banks off. So we were seeing a lot of conversions on those. And generally the retail space, again, is reducing. So there's always opportunities on the high street with retail. So what does Roma look for from their borrower? So we put them into 3 areas. Generally, as you'd expect, the experienced property professional who's been doing it for a while, knows what he or she is doing. Secondly, could be a successful individual in another field, dentist, doctor, accountant. Tends to be a professional person with reasonable, good income levels. We feel that they're successful in their field, so they can apply those type of skills to if they want to move into property investment. And then you've got, which isn't listed there, but you've got your hands-on, your plumber, your very hands-on individual electrician who likes to get involved in the project. Very handy, and will reduce his costs really, because they get involved in the development, in the refurbishment. So yeah, that will obviously increase their profit from the deal. So what we look for, are the objectives realistic? Is it going to happen? What they're proposing? Is there sufficient project profit within the project for them? And then if something goes wrong, as a borrower, can we work with these individuals? We like to get to know our borrowers. We can meet them face to face, depending on the size of the project. And we like complete transparency from both sides. So understanding the borrower, what is their motivation in terms of the project? Why are they sort of in property? What is their experience, their background? How many projects have they done? What type of projects have they done, really? And are the costs and the timescales realistic? I would always say, make sure, give yourself an extra 3 months. I've seen a lot of 12-month deals become 15, 15 become 18. There's a lot of overruns. It could be planning issues, delays. As we've touched on earlier, could be getting hold of materials. Just make sure that you've got sufficient time to get the project completed and the exit, in terms of whether that's the sale or a refinance. So in terms of Roma's products, we've got standard bridging, as you would expect. We've got an auction finance product, which is a standard bridge, really, but we realise that those transactions generally need to complete within 28 days of commitment, that 10% being paid, and that gives, you've got pressure there, and we're aware of that as a lender, so we prioritise those to make those happen. In terms of our refurbishment product, we categorise them in sort of 3-4 areas. Sort of a refurb, which is very light sort of works, which would be classed as your kitchen, bathroom, just general decor. A light refurb is a little bit more. It's sort of 25% to 50% of the value of the property. So you could include generally more works. The property could be in worse condition. And then we move on to sort of medium refurb, which sort of may be sort of an extension. So roof conversion, loft conversion. So that would equate to what we class medium refurb is sort of 50% to 100% of the cost compared to the value of the property. And then the far end of the scale is what we call a heavy refurb, which is generally commercial conversion to apartments. So the cost of the actual works is higher than the value of the property itself. So yeah, that's where those sit. We do ground up development. All our loans start at sort of minimum value of 100k. So we sit in the smaller segment of development finance. I personally do a lot of single new builds, a lot of 300, 400, 5,000 pound developments where you're building one unit or potentially two. There's a lot of lenders haven't got the appetite to do loans for less than £1 million or even £500,000. So we sort of pick up a lot of business from that area. We can get up, we can do bigger sites. We can get up to sort of 12 units, but we do sit very well in that type, because there's not many lenders out there are looking and can finance the smaller development ground up opportunities. And then we've got developer exits. So following the completion of the new build, what we like to do is, generally speaking, they have already identified their next site. So the development exit product allows them to pull their money out of the project while the property or the properties are sold. And that being the development exit product, it generally tends to be a bit cheaper as well. So it'll save them cost, but it pulls the cash out, allows them to maximize on the sale value of their new build, rather than just having to take the first offer because they need the money out to start their next new build. So Roma, we've got what we call Roma flow. So this is ideal for sort of your auction purchases, your speedy sort of transactions that need to go through quite quickly. So we can apply this to sort of standard resident purchase and sort of the light refurbishment, which I've sort of just previously touched on. We sort of have reduced checks, reduced documentation. We instruct solicitors generally within 24 hours. And we use technology to cut out sort of unnecessary checks. And within this, we've recorded it, and 80% of these deals complete within a month, which sort of indicates and cross-references to what I've said about auction purchases. So this is just a little summary of what I've been talking about, really. We can use desktop valuations, AVMs, generally up to 70%. And these are where our rates sort of kick in. For a flow bridge at 0.9 a month. The rate increases a little bit more, where if we've got those works to 0.93, and then the light refurb it just goes up to 0.95, and that's for the works where they're 25% to 50% of the property value. Here's a summary of all the products that we offer, the loan to values. I won't sort of run through all of those, but it's fairly straightforward in terms of what you can see there. In terms of what we work with you, we try and work with in terms of rate, commission levels. We work with you. There's generally a pot of money to work with, but we'll be as flexible and as helpful as we can in terms of structuring that deal. We lend in England, Wales, and Scotland. And we've touched on what the types of securities that we do. Obviously, HMOs, semi-commercial. In terms of, even if somebody hasn't got the funds in terms of deposit, we can fund the whole transaction if there's additional security in there. So we could look to place a second charge on the borrower's main residence up to 65% to raise deposit monies, or if they've got other property and unencumbered buy-to-let, and it's a sizable deposit, we can raise funds against that security at the time, so effectively funding 100% of the transaction. The developer exit product, which I touched on a short while ago, we take on properties that are just wind and watertight. Not all lenders do that. They have to have practical completion. But if it's generally internals, the property is wind and watertight, we can take those on to generate a little bit more cash and allow the project to complete. We tend to use a lot of title insurance wherever we potentially can to speed up the process. And as I said, our loans start at 75k and we can get up to around 3 million, slightly more in central London. So this is just an example of a quick case study. This was a Roma flow bridge. It actually completed within 12 days over a 6-month term. It was identified. It was a quick sale. So we sort of managed to get it through in 12 days, which is pretty good considering there's a full valuation involved as well. So yeah, generally that is achievable. And then we've got the second case study. This was a little bit more complex. This was a sort of a renovation, semi-commercial, with a flat above. You can see the figures there where we came in, and on this one, like I just said, we're using additional security that was worth $250,000, which was a commercial as it stands. So we're able to capital raise against that property to ensure that the project was 100% funded from day one. And in the meantime, they managed to get planning on an area onto the rear of the security, which we allow them to get planning. So we're going to actually fund the new build on that site also.
Mark, you've not seen this slide because I did this
Ah,
in last
no, I
night.
haven't.
This is everybody. So obviously we're aware that you can go direct to Roma, but we have packager status with Roma. So if you want to go direct and earn 1% or come through us and earn 1%, entirely up to you. Obviously, our contacts within Roma go as high as the owner, and who I've known for many, many years, which is a major advantage at times. And only yesterday, I believe it's now completed. I'm hoping it's completed. I've not had official confirmation. We had a deal with Roma, and I believe the introducing our broker partner is watching today. Hi, Steve. And that hopefully completed yesterday. But the valuation had expired, and the valuer was refusing to extend the valuation. So one quick phone call to somebody senior, and Roma hierarchy have agreed to do it. So it's one of those situations. It's not what you know, it's who you know. Quite as simple as that. And it only went overturned because the client solicitor was an absolute idiot of the highest degree. It just shouldn't be trading, but unfortunately is. And he won't be our client. That client's not our client. That client will not be using him again, I'm told. So if you want to come to us, if you want, you can package the deal. We have no client contact. You get 1%. If it's non-packaged, you normally earn around 1% anyway, because you get 0.7% and also a share of the broker fee that we charge if one is charged. On the bigger deals, we quite often tend not to. But the main thing is paid on the day of completion. We always pay on the day of completion if we've got your bank details. We must stress that we must have your bank details confirmed to us at completion, because so many times in the past someone has changed their bank and not told us, and we've then got thousands of pounds floating around somewhere that can't be credited. Okay, we're on to the questions part. There is... Oh, Steve just said thank you. Thank you, Steve. Thanks for the business. And I'll be going on talk about that deal a little bit later, by the way. Any questions? There's no questions from the delegates. I think Paul Rose lost connection, but that wasn't us, Paul. That must have been your broadband. Bill Gates has obviously decided to attack you rather than us today. In that case, then, Mark, it's the questions that you set yourself. Do you take on partly completed new build projects?
Yes, we do. Yes. Again, not all lenders do, but yes, I do get numerous requests where funding issues could be various things where, they sort of borrowers have been left in the lurch a little bit. So yeah, we do. In terms of what we look for, as long as it's been professionally monitored, it's been done correctly in line with regulation, all of those things really. Then yes, we do take on partly at various stages really. So yes, it's always worth knowing that we will look at those, because not all lenders are keen to do that.
Very few actually, because lenders don't tend to like getting involved in something. They don't know what's happened.
Yeah,
there's always a story. We saw a lot of these where borrowers were being directed towards lenders that raise their money in, what's the word I'm looking for? It's gone out of my mind. No, it's gone in a particular way. I'll come back in a minute. It's my age. And just all of a sudden saying, no, sorry, we haven't got any money. We can't actually give you any more money towards the build project, but we're still going to charge you the interest. And if it goes over term, we're still going to charge you penalties.
Yeah,
it always seemed a bit unfair. So we've seen quite a few of those over the years, and it is unusual. But this is something we've used Roma before for this type of deal.
We just like to help people out really. If there's a way of doing things, then we like to work with people to develop relationships. So and people remember those type of things. They could be in a bit of a mess. If Roma comes to the rescue, they will no doubt come back to us again, and that's what it's all about really.
Exactly. Ujwal was asked, do you consider consumer buy to let?
We don't, unfortunately. I didn't say that. I should have said. All our borrowing is non-reg. Yeah, so we have to be careful on that, and
we have options for that. So give us a call if you've got a particular deal. We do have options for that type of deal. I know one of the staff was dealing with something exactly that yesterday, a bridge on a consumer buy to let. So the second question you set yourself, Mark, was what would you say that your current sweet spot is for new business?
Well, I've probably touched on it actually. I think. I would say probably 50% of my of my new business is ground up development, and probably the remaining 30, well, and I'd probably say that 30% is more complex refurbs. I do, the straightforward stuff as well, but we have to take views. We try and be commercial as much as we can, and yeah, that generally comes through. So I believe ground up developments and refurb projects are where we sit really strongly, because we're very experienced. We've been around 10, 12 years now. We've got soon to be 10 different funding lines, so we can generally find a solution to a project that needs funding. So that's where I feel we sit strongly, and that's indicated by the type of business I attract through various sources, really.
Okay, now experience of Roma on ground up developments has been excellent. It really has. And the last client that we arranged finance for was absolutely over the moon the way it went, because he thought, because of he didn't have a lack of experience, but it was a slightly difficult case. He was a qualified electrician who was doing his first build, but had done builds with his brother in the past, but his brother had obviously made the profit, and he'd been doing the Sparky work.
Yes,
he was doing his first one, but we could prove that he had lots and lots of experience of doing this, and he worked for a house builder as well at one stage.
Okay.
It sailed through, and both our broker partner and the client got really, really good testimonials out of the pair of them. So, and that's what you want. That really is what you want.
Good to hear.
I think we are done, Mark. Thank you so much. Very nice to meet you.
You too.
Thanks for that. Simon will remove you from the room.
All right.
Only because you've been clicking some buttons at the start. I don't want you actually closing down the entire.
You don't trust me.
That's entire show. It's not a case of trust. It's a case of worry. So Simon will remove you from the room. You can watch the rest of the show if you like. Entirely up to you.
Okay, thank you.
We will move on to our next speaker. Okay, our next speaker is Mark Newman from Hampshire Trust Bank. Hampshire Trust are a lender that we've been heavily involved with since the Specialist Finance Division launched all the way back in May 2016. And we were their largest broker every year all the way up to COVID, I believe. And then COVID hit and we weren't. But always a big part of what we do. There's Mark. Mark, can you hear us? Can you see us?
Yes, I can hear you and see you.
Okay, so I've only met Mark recently for the first time, because he's recently taken over as our business development manager. Lovely, lovely guy. There's some good things about him. There's some bad things about him, which we're about to cover. But this is what you should have received today, which is Hampshire Trust interest rates for specialist buy-to-lets, HMOs, MUFBs, and also semi-commercial. And Mark will be talking about those today. A little bit about Mark. He's been with Hampshire Trust Bank for 2 years and has worked within the specialist finance industry since 2019. He breaks down deals and structures them to see if they're acceptable and fit within criteria. Mark's mindset is how they can make this work. He uses a common sense approach along with his experience within the industry to structure deals and support brokers. He is also keen to learn from brokers to help him and HTB's proposition evolve. Now, this is where Mark immediately, when I read this yesterday, went to the top of the table in my mind as BDMs of Specialist Hub, because he is a West Ham supporter, and I've supported West Ham since the 19th of October. When was it? 1968. There's a story behind it. So he's used to having an open mind. Okay, so we're still top of the table. Then I read the next slide, and immediately he plunged to mid-table, which is where West Ham normally end up, because he applied for Love Island just before joining Hampshire Trust Bank and was accepted. But before going on, he fell in love and has been with his partner ever since. But he's a bit gutted because he'd be living off the brand deals now. So,
what can I say?
My God. Anyway, we won't hold that against him. Mark, it's over to you.
I appreciate that.
No problem at all. If there's any weird music goes on in the background, it's a Love Island version of Hampshire Trust presentation. I will see you in 20.
Perfect. Appreciate that. Okay. Hello, guys. So I'm the business development manager for East Anglia for Hampshire Trust Bank. So bit of background on me. Used to work as a loan manager in Shawbrook, so got pretty much the front and back end experience of how the deal should go and how it should finish. So what can I say? It's a challenge, but it's all good fun sometimes. So HTV, we are privately invested, so our sort of rates fluctuate when the swap rates fluctuate. We've got our own cost of funds, so it's a very challenging market at the minute with sort of swap rates. I would say they've started to level out, but it's still very volatile. So we're kind of in a position where how can we make this work? What can we look at? Do we sort of change the fees around? Do we release new products? So always thinking about what's next, and how we can evolve in the market to support you guys. So in terms of what does specialist mean to you, what it means to us is we look for the quirkiness. So the quirky deals, sort of find the avenues that maybe other lenders aren't in. And if they are, how can we enhance our product guide and our criteria and outlook on the deal to kind of fit in them little niches that may not work over here, but we can take a common sense approach and a view on why can't it work. So what we look at is sort of flats above commercial premises. We do expat foreign nationals, we've got credit issues, debt consolidation, holiday lets, short-term lets, Airbnbs, MFBs, HMOs. Got wide sort of criteria outlook, shall we say. And then we've got offshores, trust, LLPs, SPVs, sitting tenants, you name it. We've kind of looked at every avenue on how we can make it work. So I think a good part of what HTV do is we don't try to copy and go in the markets that everyone else is in. We try to find our own lane. And if we're not seeing a lot of the, I don't know, say for example, we're not seeing a lot of credit issues or a lot of expats, okay, what are we seeing and what can we evolve? And that's where we need sort of the likes of Tony and all our other broker partners to sort of come to us and say, we're getting a lot of these inquiries. Is there any way that you can look and take an outlook on if it's one that we can do? So we're forever evolving in this ever-changing market. And I think what we're seeing is a lot of investors who had a buy-to-let in the background was going to sort of comfortably have their retirement and just have it as an income, passive income, shall we say. It's just not that market anymore. Sort of your standard buy-to-lets, just there's no serviceability in them. So what we're kind of seeing a lot of now is you've got the first-time buyers, first-time landlords, the high net worth individuals sort of coming over who either live in sort of Turkey and in sort of a foreign country, Dubai. We're seeing a lot of they're coming over and they want to invest in the UK. And where the market is very volatile, you're getting all the sort of buy-to-lets that they was just going to have a buy-to-let for their retirement, selling up. You're getting these new investors coming in, buying them at a relatively okay price, or we're getting the very experienced portfolio landlords sort of chipping them up and then putting them in their portfolio. So what we're seeing is kind of a lot of high net worth individuals who have many, I say, properties, and they just want it on one application, one mortgage payment a month, and that's where we come in. We can just do it all on one application. And when you get the rate card, you'll see sort of the higher the loan amount, the lower the rate. So that's always a key bonus for us. So what's our sort of buy-to-let proposition? So we've got sort of a wide range of, we've got a minimum loan size of 100 or a maximum loan size of 25 million and the max exposure of 25 million as well. So again, like I say, we see our very high net worth individuals. We also see sort of first time landlords wanting to sort of buy their buy-to-let and start their portfolio. And then in terms of minimum income, we don't have a minimum income, only if they're first time landlords or sort of holiday lets. We're not seeing as many holiday lets, I would just say, because there's a lot of changes in the market, and sort of you can go away now. So we are still seeing them, but they've reduced significantly, I would say, just because the serviceability and exposure, I think it's not there anymore. So no maximum age size, no maximum age. So that's also a key proposition. We can take a view. So if we've got 80, 82, we may just reduce the term. But we are seeing a few of those as well. So we've gone into that. Up to 75% net. Gross is 77, so we can go up to 75% across all of our sort of semi-commercial and buy-to-lets, and then portfolio lending, no maximum size. And we've also got a wide range of products to help with leverage. So we've got one that has a higher fee, we've got one that has a sort of a low fee, but it's to help with the leverage where the rates are sort of high. We needed to implement something that would help you guys get the max out of the loan. So and then no limit to the number of applicants or directors or shareholders. And then in terms of first-time landlords, these are a few key sort of things that we look at. But again, it's forever changing. So I would say we're seeing a lot of new first-time landlords who are, I would say, either sort of they've moved to Dubai, they've got a fitness business, or they've moved here, there, and everywhere. They then want to come first-time landlord, and that's all they've got really hit. So we can do maximum portfolio of 4 units, clear credit history, small minor blips. So if they've got credit card payments missed or sort of utilities, communications, we take a view on those, and we understand that look, it happens, as long as their credit sort of history isn't absolutely abysmal, where you've got sort of default CCJs, and sort of very high debt leverage, we can take a view on those. In terms of sort of individual max loan size is 500, but then the maximum exposure is 1 million. So if they wanted 2 loans worth 500, we can. There has been some exceptions for high net worth individuals. So if they want sort of a loan size of 600, 650, we can get an exception on that, as long as sort of it makes sense. That's the mentality we're trying to go into. So if it makes sense, look, we're here to lend. You're not going to be a bank if you're not willing to lend. So if it makes sense, and we can justify the reasons behind it, I don't see any reason why we can't do it. So in terms of the buy to let, sort of what we look at and where we're seeing a lot of it. So we're seeing a lot of standard residential homes turn into HMOs, and they're being let on corporate let agreements, or we're seeing MEFBs above shops and PD schemes. So office blocks that have now changed into self-contained units. We're seeing a lot of those because, sort of, as Mark from Roma said, a lot of the warehouse industry, sort of working from home and stuff like that, offices, there's not that much demand anymore. So what we're seeing is a lot of office blocks, ex-office blocks turned into self-contained units, and we can do the dev exits on the terms. We don't have a max exposure limit, so we're not too concerned if you bring us, I don't know, 50 self-contained units all on one block. We would just do a block value, which is usually around sort of 10% lower than the aggregate value, but we can take those. So, and then you've got, again, holiday lets, Airbnbs. The only thing I would say, Airbnb now in London has actually got a restriction, so you can only let the property for 90 days, which then again has also killed a bit of the Airbnb industry in Greater London. You have to now go get planning and permission for it to be let more than 90 days. But there's ways around it. You don't necessarily have to let it on Airbnb. You could let it to a management agent. So there's always ways around it, but that Airbnb has kindly slightly reduced in London. Flats above commercial premises, we can look at ex-local authority houses. We can all ex-local flats, local authority flats. We can also look at, and then flats of good quality above 10 stories considered. We can look at pretty much kind of anything that there is demand. In terms of the ex-local authority, we may just take a stance of lower the LTV. So we may go to 65%. We want them to be privately owned, and if they have deck access, then we're a bit kind of, okay, what's the valuer's comments? Is it a strong demand? Are there? Is it going to be one that can be sold within sort of six to 9 months, 9 to 12 months, or are we going to kind of be sitting on this? Which would then we may then take a view of, look, this one's not for us. But like I say, it's one we can consider. And then you've got sort of DSS tenants and serviced accommodation, low rental yielding properties, income top up. So we can do income top up. It has to be employed income, and then there are brackets that they would have to meet. So, and that is for UK based clients for income top up. So if the rental's just not hitting it, but they're a high net worth individual, the questions to ask are, so what's your income? What's your income and expenditure looking like? Have you got any surplus funds each month? And again, it's about what's their motivation. Do they want max leverage? Do they want lower rate? Do they want flexibility? It's all the key questions that you need to ask, which we would then sit down and say, okay, well, if it's max leverage, this is the product, and this is how we would structure it. And if it's not, then what else is it? So that's kind of the questions that we would ask and want to find out from you guys, just to make it easier for us to then say, okay, this is how we could look at it. In terms of our semi-commercial property proposition, we can go up to 75% again. Multiple tenant types considered. On the next slide, there are a few cases that I've got that we can go through. Commercial element up to 50%. So a key thing that we like to venture into is the 50-50 split in the value. So it's the total value of the property rather than the floor size. Sometimes it's good, sometimes it's bad, but if it's a close 50-50, we don't automatically kick it out if it comes back a little bit more on the commercial side, because we understand that sometimes it's very hard to find if it's going to be a 50-50 split unless you've got a valuation in front of you. So we do take a view on those cases as well, but we want the split to be 50-50 in the total value. Residential income used for ICR requirements, but we do also use the commercial. It just depends on, is it vacant, is it let, what's the lease strength, is the area a populated area where you're going to get a lot of footfall, a lot of demand for the retail unit. So there's key elements that we're going to look out for as to whether we can use the full commercial, some of the commercial, or reduced, or just the residential for our ICR requirements. And our ICR stress test starts from 125% at pay rate. So that's also key. Trade from commercial, so owner occupied commercial, we just can't do if they live in the unit or have lived in it. But I'll touch on that just at the end, how we view sort of consumer buy-to-lets at HTB. But if they trade from the commercial premises, we can take a look, and we can, if they pay themselves rent already, we can incorporate that rent to increase the leverage and the ICR requirements. We do also have purpose-built student accommodations, student lets, we can do. So what we're seeing is buy-to-lets and above flats above semi-commercials. If you've got a lot of units, they can be on student lets, or you've got a purpose-built student accommodation. We can also incorporate that into HDBs and what we can look at. So we've got extensive range of commercial entities accepted, 2% arrangement fees, 5% arrangement fees, and then with the rates, obviously we try to be as competitive as we can be, but that we all know the current market at this current point in time is a very strenuous market. So, and these are just some of the key features, sort of shops that we can do. So we do offices, you can do shops, restaurants, takeaways, beauty salons, hairdressers, barbers, you name it. So we've done it. If there's a property that's next to an MOT garage, we have done one of those before. We can consider next to petrol stations, but we have to have an environmental report that has passed. So as long as they've got an environmental report that is passed and there's no concerns, we can take a view on it. But again, we may just put a bit of common sense on it and say, okay, we wouldn't want to go to max leverage on this, but we can go to 50%. It still gives the applicant an option, and it's one that there's ways that we can make it work. So, and then another one sort of key areas that we're seeing is you've got the takeaways, the fast food restaurants. A lot of lenders aren't too keen on those, whereas sort of we'll take a view as long as the valuer doesn't come back and say there's no demand whatsoever, and yeah, it's just not going to be let. But we've got sort of people in place. It's a common sense approach we're taking. So, and then these are a few sort of case studies that I just wanted to sort of show that why we're a common sense kind of, well, why I'm a common sense kind of guy to push it through. So the first case study, we had 37 flats, which was all had see-through usage. There was actually on a corporate agreement to accommodate students. There was no restrictions on the title, but there was the actual construction type was prefabricated concrete panels. We couldn't be too sure if it was large panel concrete construction, and that's a sort of construction type that HDB don't really like, and it's outside of policy. So we was getting a lot of pushback from the valuer. When I actually looked into it, the previous lender was Santander. They was lending on the property for 20 years. And we actually took an approach on, okay, well, we've got a high street lender who lent on it. They've lent on it for 20 years. We don't actually need to rely on the valuer's comment to say that prefabricated concrete panels aren't large panel concrete construction. And we got a sign off from credit to complete the deal without the need for a structural engineer's report, which I think is key. It saved the client a lot of money for us to then potentially not take it. So that was a key one that we done. Another one, we had a 96 2-bed apartments, all had C3 planning. Previously, office space was the Yorkshire Bank's main head office in Peterborough. They are actually let on a corporate agreement to facilitate holiday lets and ASTs. So we actually done a hybrid type of product where we used the income from half of the holiday lets, half ASTs. We got to 70% maximum leverage, and that was a key. That was a key one because there was something in the lease that we actually had to get comfortable with, but we took an approach on, okay, does it make sense? We sat down with our legal team and we completed that within 3 months, which it doesn't sort of, it seems pretty long, but there was a few kind of hiccups that we needed to overcome. So I think that was quite a good one. And then in terms of the last one, we had one commercial unit with 3 flats above, a previous lender actually declined it because the commercial floor space was a lot bigger than the residential. They sent over the val. We took a look, and the actual value was more favourable in the residential. So we took a view. It's one that we could have done, and we went to 73% because that's what the ICR allowed us to. So there's key things. Although one lender might decline it, it will fit within another lender's criteria, and that's proven. So some people do it on the floor space, some people do it on the value. So it's always good to kind of understand, okay, it doesn't fit there, but is it going to fit there? But they're kind of a few case studies. And then these are just a few changes that we've done. We can consider vulnerable tenants. We can do first-time buyer, first-time landlord within the UK. We reduce the landlord experience from 12 months to 6 months. And then in terms of consumer buy-to-let, we are seeing a lot of these accidental landlords, consumer buy-to-lets. How we can do it is, if it's owned in their personal name, but they transfer it into a limited company, we can do that. It's a change of ownership. Or if they have other buy-to-let in the background, so they've got 2 buy-to-lets, we can then also take a look at that. So, but there are a few key changes. But yeah, that's myself.
And again, there's a slide you haven't seen, Mark. So I did these last night. Thank you for that.
Yeah.
As you would have seen from the previous speaker, I've put this slide in. Basically, this is what you get. Yeah. Packaged up to 1% with Hampshire Trust, non-packaged up to 0.7% with a share of the broker fee, obviously paid on the day of completion. We'll go straight on to the questions. Paul asked the question, do you accept deposits from abroad?
So yes, we can. We would just need to understand the deposit. So who's giving the deposit and what their source of wealth is. So if it's a family member or a gift, we would just want to kind of understand how much and where their source of wealth has come from. But we can, yeah.
Janet has asked the question, can you accept non-standard construction?
So we can take a view on it. We may just look at sort of reducing LTV, but we've got a internal quantity surveyor in the office. So any kind of construction types we send over to him. He gives us a view, and then we say, look, we can go up to 65% or 75%. But yes, we can take a view on those.
Excellent. Someone's typing another question, but I'll go to one of the ones that you've asked yourself. What was your trickiest case, and how were you able to resolve it?
So my trickiest case was the top case study. So they actually were 3 cases. They would initially decline due to bad credit, and there was a previous customer who term lapsed, and then it took 6 months for them to repay us. But I just sort of sat down with a broker, called the applicant, and we just had a 35-minute conversation, myself, the applicant, and the broker. It turned out that there was reasons why there was bad credit. There was reasons why it was a late repayment of the loan. And then when I took it to credit, we sat down, sort of structured the deal how we would want it, and we got it overturned. So that was, I'd say, the trickiest case, because that was when I first started as a BDM, and it was just trying to work out how can I get it overturned, what can I do, what steps can I put in place. And I think sometimes just having an open conversation and having full transparency just helps the case. So,
okay, Janet then followed that up with also there's some coal mining. There's some coal mining area. Would it be possible to accept coal mine within a 20-meter radius?
Oh, I've never had that. That may be one that I need to check. So what I'll do, I can actually find that out and do you want me to come back to you, Tony?
Janet, send us over some details, probably best. If it's one that is obviously quite complicated, then non-standard construction. If what you put there is actually 20 meters from the coal mine, obviously coal mining report would have to be obtained anyway. Yeah. But that's one we probably need to delve a little bit deeper, I think. Manik has asked, do you accept Pakistani nationals for an SPV, and if the deposit is coming from Pakistan as well?
So yes. So as long as it's a UK SPV and the sort of UBO is from Pakistan, that's a high-risk country. but we can still take a view. So yes.
Again, the main thing, Malik, is just to ensure that the deposit is coming. We can trace where the deposit is coming from. I always remember the one I had, and it had been in the news that the United States had lost $6 billion in cash in Iraq. And then we had a phone call from a broker partner to say, I've got this deal. The client's getting the deposit from a family member and he lives in Dubai. Okay, it's fine so far. Okay, who's the family member? Oh, it's his cousin and he lives in Iraq. And he's prepared to give him 5 million quid.
Gee.
We turned that one down,
yeah.
as you can imagine. I didn't really want to follow the money on that one. But Gavin has asked, can you accept applications from non-UK nationals, Singapore, like buy-to-let remortgage?
Yes, we can, yeah.
Yeah, I mean, we did one a while back with HTB that the guy lived in South America in the middle of nowhere, and he had one buy-to-let over in the UK. That's all he had remaining. And he was looking to capital raise some money to help with his retirement. So, but it's still qualified with on the rental income and everything else. So, yeah, no problem at all. Very flexible. Got to say, HTB in this type of situation. And as with Roma, we have obviously some sway with HTB, put it mildly, because we've written tens and tens and tens of millions of pounds with them over the years. And as I mentioned before, we were the largest broker for a number of years as well. Okay, no more questions. Mark, thank you very much indeed.
My pleasure.
Okay, I said before, great to hear you're a West Ham supporter. I'm obviously long suffering.
I love that.
Not so great on the Love Island situation, though. We might not let you in the office now, just purely on that.
No.
All meetings are on Zoom. Simon will remove you from the room, and we'll move on to our final speaker. Thanks again, Mark. See you soon.
Appreciate that. Take care.
Cheers.
Bye.
Okay, our final speaker. We have Cavina Harrison from the Dudley Building Society, who was the very first person to come in when we moved into our new office. And as you can see from behind me, Dudley have got just above my head, right in the middle. They were the very first lender to receive to get a logo on the wall.
I'm delighted to see that, Tony. I spotted that as soon as I logged on this morning.
Yeah, I need to order a few more because we've had quite a few visits recently, but I've been a little bit tardy in getting these things done. But right above me, so the very first ones, I will crack on. You should have received Dudley's intermediary product guide this morning. We are a accredited packager for Dudley Building Society, a great little lender to have. A little bit about Cavina. She's worked in the finance industry for over 20 years with roles including bank manager, mortgage advisor, and business development manager. In between this time, she has had 2 children and spent some time living in South Africa. Cavina understands the difficulties advisors facing in this industry. It can be stressful, tell me about it, and mental health can be hugely affected. So as a business development manager, Cavina likes to really try and help where she can, even if it's just an empathetic ear. I can never say that word. If she finds herself with a bit of spare time, she tinkers on the piano badly. Her claim to fame is, I'm going to ask you a question on this actually. Cavina's mum once dated the late Sir James Bond, the late Sir Roger Moore, the 4th James Bond, which I did Google. So I was thinking to myself, surely he was the 3rd, but I'd forgotten about David Niven, who was in Casino Royale in 1967. So therefore, but the question I was going to ask, when was this? Because I grew up in Stanmore in Middlesex, northwest London, and Roger Moore lived in Stanmore for many years.
Well, my mum was crowned Miss Gloucester in the 60s, and she met him at Pinewood Studios, and they shared a couple of dates together.
Okay, I think it was just after he'd become famous doing The Saint in the 1960s.
He moved to, at the time.
Yeah, he moved to Stanmore, to Gordon Avenue, a really nice house.
I'm sure.
Apparently loved his gardening. So
he's a bit of a flirt.
So I've read. Anyway, we'll crack on talking about Roger Moore. Dudley Building Society, over to you, Cavina. See you in 20 minutes. Good luck.
Thank you very much. Hello, everybody. Thank you for your time this morning. Thanks for that introduction, Tony, and thanks for having me on the web show. I hope everybody hasn't disappeared for a cup of tea in the garden at this point, but if you have, then hopefully you've taken your laptop with me. So Cavina, key account manager for the Dudley Building Society, covering the south of the country, basically. We're one of those building societies who've been around for years, and most people have heard of Dudley, but don't really know what type of lending they do. And in recent years, we've sort of spent a lot of time focusing on the mortgage lending side of the building society. And that's where I come into it, and I just try to spread the word and let everybody know where our niche USPs lie. It's really good to know what the small building societies do in the specialist market, because you know, most of us do have little things that you quite often need for customers that the high street aren't quite able to facilitate. So you know, it's really good to know what building societies like us can offer. So I'm going to share a little bit of that with you right now. We basically, our main lending areas are expat, joint borrower sole proprietor, lending into retirement, and self-build lending. And I like to call us a bit of a mix and match lender, because actually we can do a combination of all of those at any one time for an applicant, and we quite often do. So I've told you a little bit about the Dudley. I'm not going to give you all the details of our criteria, the ins and outs of all of it. I'm just going to highlight some of the few reasons why you might want to consider us as a lender, or we could be a good option for your customer. So I mentioned expat lending. We're seeing a lot of borrowing in the expat space at the moment, and this is probably our biggest main area of mortgage lending, I would say. And you know, just for a little bit of information, there's about 5 million British expats currently. So 5 million Brits have gone abroad to live, and hopefully, you know, find an exciting life. And about 100,000 are leaving every year currently. So that's a lot of Brits abroad. And of course, not all of them need a mortgage, but a huge majority of them will need mortgages or will need to remortgage. And that's difficult to do from overseas. So, you know, they need to come to brokers and advisors like yourselves to help them with that. So we will lend up to 85% loan to value on a residential mortgage. And where we differ from a lot of other lenders in this space is that we will accept currencies from most countries. So even if they're medium or high risk countries, we will consider it. We just need to understand what it is they're doing, where's the income coming from, plausibility for it. We will obviously have some enhanced due diligence if it's medium or high risk country, but we will absolutely consider those countries where other lenders might not. If they're in Saudi or Dubai, which is where we find quite a lot of expats are going, why wouldn't they? Tax-free earnings, we will absolutely accept that. And we accept 100% of their foreign income. That's another area in which we might differ slightly from other lenders. We don't take a huge haircut. So we ask you to use xe.com, which is a website, and find the lowest rate in the last 3 years, and then convert the income using that. And actually, you know, that might be a bit of a haircut in itself, but having looked at it many times, you know, it's not quite as huge as taking off 25% of their income. And it does work out to be much more favourable. Again, what we will do is we will consider self-employed expats as well, even with 1 year's trading. So a lot of lenders don't like self-employed expats. We absolutely do. And we'll do lending on an interest-only and part basis for our expats too. And it's just probably worth clarifying that an expat for us is somebody that holds a British passport who is now currently living abroad. So we can lend to foreign nationals, but they need to be in this country, purchasing in this country with indefinite leave to remain. So currently we don't accept any visas, although we are looking to changing that. So they need indefinite leave to remain if they're a foreign national and they need to be in this country. But British passport holders overseas are what we define as expats. So I mentioned lending into retirement. So this is not like a RIO or equity release or anything like that. We just simply have no maximum age on a repayment basis. So as long as it's affordable in those retirement years for your client, we can absolutely consider it with no maximum age. Our maximum term is 40 years, so obviously it needs to sit within that. And if the client's going to be 120 at the end of the term, then that's obviously not going to work either. But definitely into the 90s, we have lent on that basis, and we have no maximum age as long as it's affordable. The sorts of things that would make it affordable, the sorts of incomes that might work in that space would be really healthy pension income. That's great. Land and property incomes. They've got rental properties and they're going to continually benefit from the rental income on those. Or they might just be a director of their own limited company and they're stepping away from the business, but they're still going to benefit from salary, dividends, and just dip their toe in from time to time. But that income is still going to be coming in as others run the business for them. So those are the types of incomes that we could definitely consider as guaranteed with no maximum age. If they are in retirement, it's 70% loan to value. And if they're going to be going into retirement during the term of our mortgage, it will be 80% loan to value. But what really does work well with this as well, which we offer, is joint borrower sole proprietor. And I include that in this slide because quite often you might have your clients a first-time buyer, and as we know, they're all really struggling at the moment to get on the property ladder. So a lot of them are looking for their parents, maybe, or a parent, to come onto the mortgage as a JBSP and help them out. And this is sometimes hindered by the fact that the term is based on the parent's age. And so therefore, there's not a huge amount of term left and the mortgage is quite expensive. So with us having no maximum age on a repayment basis, this could work quite well on a JBSP with parents going on the mortgage with their child. But equally, we can do it the other way as well. And, you'll know that there's lots of people out there that had an old interest-only mortgage years ago with an endowment. I was one of them, spent the endowment long before the mortgage came to an end. High Street Bank now wants their money back and there's no further products available to them with that bank. So they come to you for advice. Their income is now much lower. And what are their options? So one of the options might be that a child or their children go on the mortgage as JBSP to help keep their parents in the property, if that works. And that's definitely something we can consider as well. And that's even, if the applicant is retired or going to be going into retirement age and there's only on state pension, it's as long as it's affordable with the other borrower's income on the mortgage, then that's going to work for us. I always like to include this slide because this is a case we actually did. They were in their 50s, 35-year term on a repayment basis. They had their own business, so we were happy with the income and we were happy to lend them 720 grand. But what this slide always reminds me to share is that we're quite flexible on property types too. So this was a grade 2 listed thatched building with multiple acres. Why wouldn't you want to live there? It looks beautiful and idyllic, and we were absolutely happy to lend on this property. So we're quite flexible on property types and property locations. Multiple acres is okay as long as there's no agricultural ties or commercial elements, commercial businesses running on the property. Methods of construction. Somebody mentioned that earlier with the previous speaker. So we will consider non-standard methods of construction, and we'll consider modern methods of construction too, of which, there are many new and wonderful modern methods of construction coming out at the moment. So we will consider all of those. We use Connells, and what I am able to do, if I'm not sure if it's something we will lend on, is go directly to Connells with the information and see what they recommend before you waste any time on an application. Annexes are also something that's quite common and something that we're happy to lend on. If they have an annex on their property, whether it's let out Airbnb or family live it, whatever may be the reason, we can absolutely consider that. Our main criteria for that is that it's all on the same title, it's all on the same council tax, and it's all on the same utilities as the main residential dwelling, and that the annex is not larger than the main residential dwelling. So as long as all of that complies, we're absolutely comfortable with annexes. Interest only. Reasons that you might want to use us for interest only: we have no minimum income and we have no specified amount of remaining equity. So as long as the equity remaining is sufficient enough for them to downsize locally, then that will absolutely work for us. And we'll go to 75% loan to value, which is quite generous. We can obviously accept other repayment strategies, but for downsizing, like I said, no minimum amount of equity. It just needs to work that they could downsize locally. And we'll also accept part and part too, so part interest, part repayment. And self-build. So self-build is an area where we do a huge amount of lending as well. So we'll lend up to 80% loan to value. So that may be that your applicant wants to purchase the land and they've got planning permission and they're going to build this wonderful house. So we will lend up to 80% of the current land value, and then we will lend them tranches, payment tranches at each stage of the build. We'll do this on an arrears and an advanced basis. Arrears is more common, so they get the build to a certain point, then we instruct, have an inspection, and then we'll lend them up to 80% of the value of the property at that time. Advanced is less common, but we can do it. The main reason that it's less common is because we take a second charge over another property to be able to give them advanced payments on a self-build. So that's why that's less common, and an arrears basis, it works more often. So they may have already owned the land, they may have inherited the land, and that's fine. And we can lend them money then, tranches throughout the build of the property. They may be halfway through the build and they've overspent, run out of money, and we can get involved halfway through, whatever it may be. But and we'll also allow as many re-inspections as the applicant would like. So it doesn't need to be at certain levels before we'll inspect it and release money. However often they want it to be re-inspected is fine with us, and we will always lend them up to 80% of the value of the property at that time. And something else that's really useful to know is that if they're still going to be remaining, still got a mortgage payment remaining or a rental payment on their current property, providing they can evidence savings that would cover 12 months worth of those payments, we can ignore it for affordability purposes. Eco properties, so self-build properties are quite often eco-friendly, beautiful, lovely properties, and we have specific eco products as well where the rates are slightly lower. So we will accept modern methods of construction. So just a couple of other things that's worth mentioning. We take a human approach to underwriting, as many specialist lenders do these days. So let us know as much information as you can about your applicant's requirements and their current situation. At DIP stage, they're always looked at by an underwriter, fully looked at by an underwriter. So the more information we can have at that stage, the more of an accurate decision we can give you, so that you don't waste time on it if you know that there's an element of it that's not going to work. So give us all that information up front, and that's the best way to get an accept decision from us that's going to remain as an accept throughout the process. We'll allow up to 4 applicants on any of our mortgage products. So whether that's an expat mortgage, a joint borrower sole proprietor, a self-build, whatever it may be, we will allow up to 4 applicants and we'll take 100% of that income. And as an example, I had one recently. They were expats, parents were expats, they were retired, they were in their late 60s, their daughter was buying a property in the UK. All 3 of them went on the mortgage. So that was an expat, 3 on the mortgage, and lending in retirement. So we can mix and match everything. I've also done an expat purchasing a self-build. So, you know, a combination of those 2 works with us as well. Self-employed, really good with self-employed. We will accept 1 year's trading. We will also consider salary, dividends, and retained profit, up to 90% of retained profit. So that's not net profit, that's retained profit within the business. So the business needs to have a little bit of history and have been running for a few years for us to be comfortable with the fact that we can take some of that retained profit towards affordability, and the business will still be able to survive quite comfortably. But that is definitely something that we can consider. Second jobs, yes. Second homes, yes. Gifted deposits. Probably good to know that we will accept a gifted deposit from a non-family member. So just needs to be plausible, just needs to make sense. So it can't be, you know, my friend Jack down the road is going to lend me 20 grand and he doesn't ever want it back. You know, that's fine, but why would Jack be wanting to lend your client that money? We just need to understand that and be comfortable with it. But that said, equally, we will accept deposits that are monies borrowed from a family member. So if the family member doesn't want to sign the gifted deposit form to say that they don't want it back because they absolutely do want it back, but they're still willing to give them 10 grand towards it, we would factor in repayments of that deposit towards affordability, but we would absolutely consider that as an option for the deposit as well. And we're not really thought of a lender for adverse necessarily, but it's worth knowing that we do accept a certain amount of adverse, and we might be a better option for your client at some time. So maybe it's just a bit more than the high street will allow, but actually, you know, it's something that we could do before looking at maybe adverse lenders and rates that are a lot higher. So, and the sort of thing that I mean is old defaults, or CCJs that are probably satisfied now and aren't too huge. That's the sort of thing that we would just accept on our standard terms. So in summary, really, Dudley Building Society, our main lending areas: expats, joint borrowers, sole proprietor, older borrowers, and self-build. And, you know, I just want to end really by saying that we are very customer focused. And what we do understand is that, you know, you are our customers, and we want to try and make sure that the process and the journey for you is as streamlined as we can make it. And we're really working hard in the background to make sure that's the case. But also, more importantly, we understand that your customers will be our customers too. And, you know, whatever we relay to you, you're then relaying to your customer. And, you know, myself personally, I'm very mindful of that. So we always try to make sure that we will give you the service that your customer needs as well along the journey. So that's it from me, Tony.
Marvellous. I've added this slide in last night. Here's one I made earlier. Obviously, I mentioned we have packager status. So for package cases, 0.4%, which is what you get if you go direct, paid on day of completion, non-packaged 0.28% plus a fee split, as always. So you normally end up earning probably closer to 1% quite often. But I must stress, paid on day of completion. You go for a mortgage club, you could be waiting weeks sometimes. So just keep that in mind. Right, I'm not going to forget the next bit, which is the prize draw, because not only have I had reminders done, but I've also had the attendees list today, all numbered. So, Cavina, can you give me a number, please? And this is the people who've been here at the start and were here 3 minutes ago, still here 3 minutes ago. So I need a number, please, between 1 and 69. Okay,
ready? I'm going for number 13. Always lucky for me.
Number 13 is... hopefully I pronounce this right. Isan Mayer from EM Consultancy. If you could just type the message in, Isan, please. In your type message, just say here. That tells me that you're actually watching. Someone is typing. Oh, it's the oh no, we don't. Someone just asked a question.
No, we don't. Sorry.
Shay put in here, but Jeff, nice try. Isan, I'll give you another 10 seconds. No. Hello, everyone's typing. I'm now missing what's going on. No,
they're all saying they're here.
Right, we have to call it another number, unfortunately.
Okay.
Run out of time.
I'm going to go number 22.
22. Harry Sharalambus from Bond Financial. Harry, quick as you can. Marvellous. Harry, it's
Yay!
100 quid. Okay. Dudley
Well done,
will
Harry.
contact you direct regarding that. We don't get involved. Otherwise, if we did, I'd need to take a 10% commission. So I put that to one side.
Yeah.
Questions. We did have one question asked during that. I think there might have been another one, actually, just amongst everyone saying here. Thanks, everyone. Malik asked, do you do right to buy applications?
No, I answered that. No, we don't. Sorry. We have done in the past, but we don't currently do right to buy.
Sorry, missed that because I popped off to the loo. So Janak has said, hi, Cavina, good morning. Very local to me, and we'll have a cup of coffee, then discuss the remortgage to debt consolidation, 75,000.
Oh, lovely. Yeah, happy to do that.
Remortgaging. Don't forget, Janak, come through us. You get paid the day of completion. I must keep saying that. Pierre has said, Dudley sounds too good to be true. There's more people saying here. And Pierre has had, what are your rates? We sent those to you this morning, Pierre. If you've not got them, contact us and we'll get them over to you again. What time are we? Time for one question from your list. Will you accept income from a trust fund?
Yes, we will. Absolutely. We need details of the trust fund. We need to see it. But yes, we can consider that. Marvellous.
Cavina, marvellous as always. Thank you so much. Simon will remove you from the room. Thank you for that. Very, very informative.
Thanks, everyone.
And we'll speak to you soon. Okay, so this is the bit I do at the end. We've got 25 minutes. Hopefully, should be finished before then. So I'd say this is a mini show today, 3 rather than 4 presenters, but you get an extra hour to get some work done today. So it's just I always start with a bit of news. Not a lot has gone on in the last 3 weeks since our last show, to be honest, because all lenders tended to do is increase rates, which has been a bit of a pain, but it is what it is. But I mentioned this. I keep mentioning this one. We have launched an exclusive second charge product, and I know the person behind that is watching today. So hi, Sue. 75% LTV income calculation will help complete more business. Any amount of adverse accepted within reason, of course, and excellent earnings potential. This is exclusive to Specialist Hub. If you have any cases that have been declined by your preferred second charge partner, because not many of our broker partners are able to go direct to lenders, then give us a call. But also, while you're using someone else, you should be using us. But give us a call, because you will get cases through that you won't get through elsewhere, quite simply. So I did this last month. Yeah, I did this in the last one. I did a little poll. We've actually decided to go a little bit more technical now, and I'm hoping a poll will appear on the screen any second now, because if it doesn't, fantastic. Right. So mortgage clubs. The first question I've got is, do you use them? So I've not seen this before, so I've not actually seen what it looks like. I was going to scroll down. So if you scroll down on your screen, you'll see the rest of the questions. As many of you can answer as possible. This is quite important. What I'm going to do with this poll, and also the next poll I'm going to be doing, is that this will form part of our Sutton the Specialist with Robert Sinclair in a couple of weeks, where he'll be talking about consumer duty. And the situation with mortgage clubs, I think, is a conversation that is beginning to start. I'm just going to go down, and there's a few not sures. Keep voting. I'll give you another, where are we? I'll give you another 20 seconds. So if you can all just vote as much as possible. A few of you said yes in the, you don't have to do it in the type your message bit. If you're using a mobile or a tablet, just click the button that you can see. But if you put yes in the, I don't know, those of you are putting yes in the type your message, I don't know which question you're responding to. So no need to respond that way. But if you could just do it on there, we're still getting votes. Still coming thick and fast. Okay, that seems to now have stalled. So, yeah, someone's typing. Yeah, someone else just said yes. But again, I don't know which question you're responding to, because there's 5 of them or 4 of them. So I'm going to end the voting on that one. We're going to come on to the next one. The reason we're doing this particular one, and I'm hoping I do this right by... Yeah, that's... Okay, so mortgage clubs. The reason I'm actually covering this is, I mentioned this last month. We had a completion back on the 16th of February, we actually had, if I'm wrong there, it wasn't the 17th of March, it was the 20th of March we got paid our money, which was over 10 grand, which was lovely. Our broker partner was paid on the 16th of February. We had to wait pretty much close on 5 weeks, but the mortgage club earned £1,218 for doing literally nothing because we didn't make contact with them. We never make contact with mortgage clubs. We have to use them because they are the payment route that lenders determine we have to use, and literally earn that money for paying us a prop fee. And with what's going on with consumer duty at the moment, I'll come on to this in a moment. I'm not so sure how long this can be sustained for, because is it doing the right thing by clients that there's companies earning significant amounts of money but doing pretty much nothing at all? So just on to the next one, because this is I mentioned this earlier on, we've got our Robert Sinclair attending in 2 weeks, talking about the implementation of consumer duty, what to expect. So this is, again, another poll just going to come up. So if as many of you can answer as possible. And there you go. So this is consumer duty one. So the first one, will you be ready to review and complete your annual assessment of good outcomes by the 31st of July this year? And we will be, but we've had to do a hell of a lot of work to get there, which is not because we've employed more staff to do it. It just means that there's more onus on me to do stuff that I didn't have to do before, because I'm just proving that we do what we say we do pretty much. So again, if you can just answer the question, don't type anything into the type your message box, because I don't know what question you're actually referring to. Quite interesting, some of the answers here, actually. It really is. But just keep going. We'll give that another minute or so. Still getting votes. Still going. I'll give it another few seconds. When I don't see there appears to be any more votes. And I've just had a message from my IT team to get to the bottom, hit submit to finish. I can't see that. So I don't know if that's referring to me. So it's the first time we've done one of these. So we have tried to test it, but it's very difficult unless you're doing a live presentation to know exactly what is going on. I think we've probably hit the number of votes now. It's for the delegates, sorry. Okay, so when you get to the bottom, just hit submit to finish, and then you're done. And Simon, if you can just then move on to the next slide, please. Apparently there's no submit button, Simon. There you go. Right, okay, so consumer duty. I mean, I've asked what your thoughts are. My thoughts. Will consumer duty stop the bandit brokers that still operate within financial services? No, it won't, because now for about a year, my company, or myself, and about 40 second charge brokers who are active in the second charge market have been reporting to the FCA those brokers that advertise on social media completely illegally, that are still advertising rates that were available in 2022 but aren't available now because rates have pretty much doubled, in some cases trebled. Have the FCA done anything about it? Not a thing. So what will happen is that these companies will continue to do incredibly well, continue to write loads of business. Lenders will continue to take business from them, which I think is an absolute disgrace. But only because they don't really, their compliance departments don't know what they're doing when it comes to this type of situation. And then eventually the FCA will go, oh, we need to do something about this, by which time those brokers will probably have sold their businesses and will be lying on a beach somewhere. Will consumer duty mean that very large brokers will do as good a job as smaller brokers when it comes to ensuring the right outcome for clients? No, it won't, because I know from many sources that the very large brokers, because their staff aren't capable of giving advice because of the volumes that are coming in, they lead the client into the type of product they want to offer. So it's basically advice by flowchart. It's probably the best description. So they can get to those lenders that they want to offer, and they can get to those products they want to offer, and they call that advice. It's not advice at all. It's leading the client on. And my third point is always a little bit of a touchy one. Is it a way of driving more brokers out of financial services so clients go directly to the big banks who eventually employ the directors of the FCA? Well, saying there's a significant number of directors of the FSA and the FCA have gone on to seven-figure salaries at the very companies they were regulating, I think that's probably already proven. Should that happen? Absolutely not. Does it happen? Yes, it does. Would it happen in the brokers get away with that, do you think? Of course they can't. Of course they couldn't. It's an absolute disgrace. But that's some of my thoughts. There's a little bit more. I wanted to cover this. This was one of the questions. I believe HBOS is playing a very, very dangerous game here. This is setting a precedent that could, if we start having situations where lenders are saying you can't charge any more than this because they don't recognize that there's different types of market out there. Some of you will write mortgages so that you can have access. The mortgage is just a loss leader quite often, just so you can get the protection product sold. Others, I mean, our business comes from broker partners, so we have to pay a broker partner. So we have to make more money out of it, just purely so there's enough to go around. Is it worth doing a 100 grand purchase case and have our fees capped when all we're getting on the prop fee is 0.3% sometimes, but there's a mortgage club in the middle that's getting something for absolutely nothing? No, it's not. And why are BM Solutions saying you can't charge any more than 1% when they're charging 3,999 or 3% on buy-to-lets regardless of loan size? Well, let's see. And will HBOS and others cap the commission paid to mortgage clubs? Why should a mortgage club earn £1,200 for doing nothing? Questions to be asked. This was the view of Amy. I do not think that regulation has dictated to lenders that they should determine the fees and intermediary charges. It stretches their consumer duty accountabilities to an extreme. We support fee outliers being challenged by regulators and networks in a constructive way, not by those whose products we are advising on and distributing. That seems to me to be a slippery slope towards price setting for a market and potentially restricting consumer choice. And that was from Robert Sinclair. That was in Financial Reporter a week ago. I think this is quite a dangerous game that Halifax or HBOS is playing. I really do. So much so that BM Solutions has now been taken off our Premier panel because I'm not having any lender dictate what we can and can't earn when they're paying part of the money away to somebody else who does nothing. So about Specialist Hub, got that off my chest. Our service, for those of you that don't know, those of you that are new today to our presentations and our shows, we offer two services, either packaged, where you give the advice if you've got the correct permissions, or introduced only, where we give the advice and still obviously pay you, keep you in the loop and still pay you at the end on the day of completion. Why are we different? Not the products we offer. We offer pretty much the same as everybody else, the occasional exclusive and quite a few semi-exclusives. Our lender relationships. Because I've been doing this 40 years, there is a large number of people that I've grown up with in the industry who say started in the industry in the 80s and the 90s that I've got to basically call friends now. They're friends. They're not business colleagues or acquaintances. They are friends that I have dinner with, that I go out drinking with occasionally. And that's the relationship. Those are the people I speak to when a deal starts to go wrong. I don't speak to the underwriters. I rarely speak to the BDMs. That's who the staff speak to. I speak with the people that make the decisions. And so many times in the past, Roma finance case that's completed hopefully yesterday as one example where just a phone call can make a huge difference. It's the people we employ as well, a minimum of 5 years experience before they even get interviewed. They have to have. I don't want someone coming in who I have to train up. Every time I advertise for jobs, I'll probably get 30 people who've not even taken the CMAP exam. And quite often, half of those just want me to try and get them a visa. I'm not interested. I want people who can literally come in and get into that role straight away and do not need their hand held throughout it. Mature with life experience, incredibly important. When I hear sometimes I have conversations. Occasionally, I'll try and speak with a lender, and I'll try and get through to somebody, and I have a conversation with somebody who's clearly not very experienced, who's clearly struggling to understand what's going on. By God, does it show? It really does. So my staff, mature life experience. All my staff now are in their, trying to think who the youngest one is. Other than my son, who's 26, who's doing a temporary job for us. My youngest member of staff, I think, is in her mid to late 30s. And one member of staff, who's Kylie, who you might have spoken to, who's head to my marketing team, has a special birthday today. She's 40 plus 10. So a big happy birthday to her. On the rare occasion, though, because I employ staff who know what they're doing, on the rare occasion that something does go wrong, and my staff aren't 100% perfect, I'm not 100% perfect. I've made about a dozen mistakes today since I've woken up. It happens. I'm a human being. But when something does go wrong, they've got the experience to recognise it and then deal with it, not shove it under the carpet and sort of try and walk away and hope it will never come back. It gets dealt with. That's why we don't get complaints. The only complaints we receive are about lenders and about solicitors and sometimes valuers. We don't get complaints about us because my staff know how to deal with our broker partners and they know how to deal with their customers. And it's very, very important. And why are we also different? It's not our numerous awards from the financial press. Those of you that know me well know that I would never, ever go up onto a stage and receive some poxy award that has been, I've probably paid some bribes for or booked 20 grand worth of advertising for. I have absolutely no interest whatsoever. Lenders, absolutely. We can all vote for lenders, our favourite lenders, but who votes for brokers? Tell me. I don't. It's about as corrupt as it gets. And I've also got this in there. Is anyone else sick of the constant vote for me, vote for us emails at present? It's driving me mad. I'm getting emails from people I've never met, never used, never spoken to, that I've never even heard of, saying, vote for me. No, go away, because you're driving me nuts. What else can we offer? One underwriter from start to finish, commission paid immediately on loan completion, as long as we have your bank details, and no commission clawbacks. We don't get commission clawbacks really at all these days, so it's not something we even have to consider anymore. What else we can offer? Our own in-house software sources all business. We don't look, unless it's regulated mortgages, we don't use the mortgage brains, the Trigoals, the 27 techs, because unfortunately we found them not to be very accurate more than anything else. So we have our own that we've done in-house: loan quote, bridge quote, commercial quote. They are updated as and when a lender makes a change, quite often within 10 minutes of that change. So we're quoting immediately that something is live, not waiting for 48, 72, 96 hours for it to appear on Mortgage Brain. It is immediate, and it's also accurate as well. Our products, everything but equity release, and you'll see there's one at the bottom there, probate loans that we now also offer, which is proven to be quite popular, but pretty much anything other than equity release if it's secured on property. Case study, this one I wanted, this is one I spoke about, mentioned earlier on, but no, sorry, I didn't mention this one earlier on. I've got another one I'm going to mention. This is one that we did with Roma, and this is an example of Roma treating a customer fairly when something gets to the end of a term. So this way back in November 21, completed a bridge for a client. That was a 10-bed, a 20-bed property, but only had planning for 10 beds. So he was applying to the local authority. As we all know, in 2021, there was a bit of a backlog with some of the local authorities, to say the least. And a year later, he was still waiting on planning to come through. So we've approached Roma, and they've written a deal again. Obviously, they charged a fee, but they didn't charge any penalties, anything of that nature. They purely charged they rewrote the deal, basically. Went through again. So our broker partner earned another, at that time, 25 grand on top of the 21 he'd already earned. In September 23, planning finally granted, and we were asked to obtain the exit, which we managed to get through as a massive down valuation on the property, as usual, valuers deciding that, well, we'll get paid. We don't care what the outcome is for everybody else. And we had to then bring other properties into it. So this was a deal where we then had to use NatWest, Shawbrook and MT Finance all to sort out the exit for Roma, introduce rent another 27 grand on the, because these all completed simultaneously. Another 27 grand, so 73,000 pounds from one client. Our broker partner earned over the course of, what was that, 2 years, which ain't bad going. The other one that we had with Roma that completed yesterday, that was somebody who needed to repay a particularly nasty product that they had on a bridge, and we was able to sort out a bridge with Roma that completed yesterday, and a couple of days ago we also completed a second charge for 250,000 on the client's home. So basically the client is now out, because they were increased. Not only was he having to make monthly payments on the bridge of 16,000, they told me if he was an hour late on the payments it would go up to 36. There you go. But dealing with lenders who know what they're doing is absolutely key. It really is. This is what one broker said about my team. Just checking the time. Kirsty, I won't read all this out purely for time, but basically, I would not hesitate in recommending Kirsty and Specialist Hub Services, or revisit him in the event of my own needs. Thank you, Kirsty. So that's a broker saying, if I need something myself in the future, as well as my clients, I'll be coming to you. That's because you're dealing with somebody who's got 27 years experience in second charges. If you want to submit a case, complete our feedback form. But at the end of today's show with the type of inquiry, we'll call you back. You can complete the decision in principle form, downloadable from our website, or we can send those over to you. I think we probably already have. There's one for every product. Go to our website, specialisthub.co.uk. You can submit inquiries online or call the team on the 0800 number or 01442 935 935. They're ready to take your call. Oh, I've just jumped ahead 2 slides for some reason. Please follow Specialist Hub on LinkedIn. I've got a target of how many followers on LinkedIn we're going to have by the end of the year. And at the moment, I'm running slightly behind that target. So please follow us on LinkedIn. Only takes 2 minutes. We will not, you do not get loads and loads of messages all the time. We don't use it for that purpose. Just trying to get the likes up, that's all, or the follows up. So if you would do that for us, that would be great. Our next mortgage show is on the 6th of June. We've got Castle Trust, Lenco, Selina, and Together, talking about 4 completely different products. And our list of 2024 dates: July, August, September, October, November. You can register for as many as you like. That's what they're for. And of course, they're free, completely free, and you get your CPD as well. Our 2024, I've had to put 2025 into this because we've had quite a few people come to, this is directors I'm talking about, of various lenders, saying we'd like to be a part of this now. So we're having to stretch it out a little bit. So I could fill about 4 slides of this, but we've got a few lined up. So Simon Knight, who's the CEO of Lenco, but the former CEO of GMAC RFC, for those of you who have been in the industry a while, see the sort of level he's at. Roger Morris, again, I've not put who he's with at the moment because it's not been announced yet, but I'm sure he's coming back soon. Josh Knight, who's the sales and marketing director of Octane Capital, I believe July, possibly, he's doing. We've got Anna Lewis, commercial director of Castle Trust. Andrew Ferguson, managing director of Buy to Let for West One, and another one to be announced very, very soon. The feedback and giveaways now, in a second, you'll see a little orange box appear. Hopefully, the one is the technology, any second now. You can download any of the giveaways today that they're available. You can also register for future shows. That box isn't showing for some reason. I'm not sure why. There it is, just appeared on mine. So don't click it yet. Not quite finished, but that will then take you through the correct route to give feedback and then also get your CPD sorted. It will be emailed to you by close of business tomorrow. As I said before, if you don't get it by 5 o'clock tomorrow, then check your spam first, then contact us on Monday. Feedback, please help us out. Go on Google or Trustpilot and just leave us some feedback. Again, that helps us mainly with consumer duty and stuff like that, because we have to evidence that what we do is what we say we do. I've got a couple of questions I'm going to come to in a moment as well. I've just seen one very relevant question. Big thank you to today's sponsor, Roma Finance. Thank you so much, as always, for being a big part of what we do and for supporting our shows over the years. Great lender, and don't forget, put your business through us. You get paid in the day of completion, and you'll get more business through too. And our prize draw sponsor, Dudley Building Society, a big thank you to them. And I'm just going to go for a couple of questions before I end it. So someone said, I thought Roger Moore lived in Green Lane, stand on definitely Gordon Avenue, because I used to go there when I was a kid and stand outside his house because he was famous and he was James Bond. That was just, yeah. Colin McCabe said, hi, Tony, do I need to register to place business and do I need to approach the Network First HL Partnership? You're already registered with us. Maybe put me in touch with your people at HL Partnership would be a good idea. Or just give me a call directly and I'll talk to you directly about it. Somebody else is typing, but unless it's a question, thank you so much for attending. We are exactly 12 o'clock. Looking at that, I've got 18 seconds actually to fill. Thank you so much for attending. As always, enjoy the rest of your day, and we hope to see you again soon. See you in 2 weeks, and I'll see you in June. I'm off on holiday. See you soon.